Welcome back, everybody, to the 50-day challenge with our celebrities in Tabaling and Jared. Today, we are going to talk about the how. Yesterday, we spoke about the why, but obviously, it's quite important that we talk about the how. Right now, I have Tabaling with me. Earlier today, we had Jared, and we will talk today to Tabaling about the how, and hopefully, as you, the public, and hopefully the whole of South Africa are watching us, you too will join in on our incredible journey of 50 days trying to build a property portfolio, or at least start building a property portfolio for Ntabaleng and Jared. Hopefully you join us, and hopefully you then can follow the same methodology so that you also can build your portfolio of properties. Guys, I'm excited to present to Ntabaleng today the how, because this is really the start of the journey in terms of her purchasing her property. Now, the difference between Ntabaleng and Jared is that she has already started her journey. She's bought two properties, as you have heard in the very first session that we had with her. And before we start the how, I'd like to ask her a couple of questions. So, Ntabaleng, you've already started your portfolio, your property journey. Can you tell us a little bit about how you got started and where you are at now?
So, technically, how I got started is that I was still working a very stable 9 to 5, not like the industry I'm in now. There's a lot of ups and downs. It's based on gigs. Sometimes it can be really fickle. But I think the fact that I started in corporate before going full time into the entertainment space, I genuinely had a very good credit score. I had regular income. So it was really just about maintaining those and keeping them in good standing so that I was then able to finance, or rather approach, financial institutions for capital. But then obviously there's a shift in that when you now shift industry, and sometimes you don't have that 3 months pay slip or that 6 months pay slip that they want to see. So it's going to be interesting in terms of how I learned to secure property, in this case, using other people's money.
All right, awesome. And I'm glad that you used the term other people's money, because that is so important in the journey that we're going to follow. Most people in this country don't have the capacity to build a property portfolio, because very often the bank or the funders will say, okay, what is your skin in the game, as they call it, which means the money that you put in. And most people don't have that money. So I'm very glad you brought up the OPM, other people's money, because we're going to talk a lot about how to raise capital in the series. So let's then jump in. Okay, so you started building your portfolio. You've got two properties already, and now you want to build further. You want to build legacy. You want to build a portfolio of properties. And through these 50 days, we are going to hopefully show you how. And at the end of it, you would have started by buying your third, maybe even your fourth property. So let's then talk about the. Just give me a second here. There we go. Let's talk about the how. So, unfortunately, today, guys, you're going to hear mostly my voice, because I'm going to show Ntabaleng how to start a property, or at least now continue a property portfolio. But this 50-day challenge. The first couple of days is exactly that. We're going to teach, so that not only Ntabaleng and Jared can learn, but that you, the public, can also learn about property investing. So, the discussion points that we are going to have over the next couple of days. First point is principles of financial freedom. In order for us to build a legacy, to build a pension fund, or whatever it is you want to build, the first thing you need to learn are the principles of financial freedom. Financial freedom is a difficult topic to discuss, and in fact, all 9 topics that we're going to discuss over this period are difficult topics. But financial freedom means different things to different people. For some people, it means that they just have a little bit of extra money to go on holiday every year. For other people, it means that it actually replaces their income completely. And for other people, it means they can retire. For other people, it means that they can travel the world, and so on and so forth. But whatever financial freedom means to you, we will talk about those principles as we go along. The next thing we're going to talk about successful property investing. In order to create financial freedom, one of the ways, now we're not saying that property is the only way. Guys, be clear that there are several ways to invest in property. There are several ways to invest in order to create financial freedom. One very wise person once said to me that there are three things that you need to do in order to become financially free. Invest, number one, in property. Invest, number two, in other sources of income like the stock exchange, pension funds, retirement annuities, etc. And number three, to invest in cash. We're going to talk about cash flow positivity. And if you invest in cash, you always know that, for example, through the pandemic we're suffering, it is November 2021. For those people who are watching in 2030, remember that this video was recorded in 2021. And during the pandemic, lots of people lost their jobs, lots of people lost their income, and the economy worldwide was completely destroyed. So if you had cash in the bank, if you had a solid portfolio of property and other investments, you would actually have survived this period. So always be sure that you invest in those three things. Property, this advisor of mine always said a third in property, a third in other investments, and a third in cash. So that is how most wealthy people invest their money. We, however, will only talk property in this series because this is a property academy. So we're not going to talk about those other things. We will talk about only property. So we're going to help you as the public, and we're going to help Ntabeleng and Jared on how to become successful property investors. Okay. The next thing is strategy, area, property, and finance. Now, in Ntabeleng, we put all of these things together because they are all interlinked. And when we talk about these in depth, we are going to talk about the type of strategy that you're going to use in property, the area you are going to invest in, the types of property you are going to invest in that area, and then how you're going to finance that. It's very important that you understand these things, because if you don't, then you're just going to be shooting in the dark, right? Do you have any questions so far on Ntabeleng?
No questions so far.
All right, fantastic. So the next thing we're going to teach you is about the difference between income or net income versus net cash flow. You will hear us always talk about cash flow positivity, but you'll also hear us talking about net income and net income before and after tax. We'll explain the difference between income and cash flow. And the biggest difference is the payment that you make on capital. Okay, so in the income and the net income after your expenses, there's no capital involved. But with your cash flow, you do bring in the capital on your bond, for example. Your bond, you're paying two things and maybe more. There are other costs that the bank will charge you, bank charges. They'll charge you maybe insurance and a couple of other things. But there are two main things. When you do your bond calculation, the payment that you're going to make every month, the repayment on your bond, you've got two main things. You've got your capital and you've got your interest. Now, in your income calculation, you only bring into it the income, or the interest, sorry, as an expense. Whereas on the cash flow, you bring in both capital and interest. Because on the income side, you are just looking at your income minus your expenses, giving you a net income and then your tax. Whereas in your cash flow, you are talking about all of the cash coming in minus all of the cash going out, which also includes your capital like your bond, and then giving you a net cash flow. Now, when you invest in any property, you have to have net cash flow and net income, because either one of them, if you have a negative income or negative cash flow, you're going to have to put in money. So we're always talking about a positive cash flow versus a negative cash flow, a positive net income versus a negative loss. Those are the things we're going to touch on in more detail at a later stage. Today, we're just going to focus on the overall how. All right, point number 1, 2, 3, 4, 5. We're going to talk about financial metrics. So, in doubling, you've already messed around on our tablet a little bit. So has Jared. Now, on our tablet and on our platform that is offered by the Academy in support of both Telkom and Huawei with the data and the actual tablet itself, we have our platform, which has been built by one of our companies called Lucid Fantasy Productions. And on that platform, which I can see Doubling is messing on right now, you will find there's a financial metrics tab. There are 15 ways or things that you have to do in order to calculate whether a deal is financially good or not. All right, so my previous boss, where I used to work in a listed company, I was the senior asset manager. And Doubling, it was an exciting job. It was fantastic working there. But obviously, I left the organization to start the EDPF because I believed that we needed to do something about transformation in the industry. So my boss used to take me to deal whenever we went to look at certain deals. He used to take me to stand on the site to look at the property, etc. And he used to do something that I always used to find so funny. He used to take his cigarette box with him and his calculator, and he used to do what he called a back of the cigarette box calculation. So what he used to do is he used to say, okay, what's the income here? What's the expenditure? What's the net income? And then what's the asking price? And then he would do a back of the cigarette box calculation to see whether the deal was actually financially viable. Now, what we have done at the EDPF is to take that cigarette box calculation. There are 15 different calculators, and we've put it into our platform. So you don't have to take a cigarette box with you. You can take your tablet with your 20 gigs of data and calculate all those things that he used to do right there on the site. Now, why do we do this? The advantage with this and the next topic that we're going to cover, deal analytics. Once you've been able to analyze the deal, you've done all of your calculations, you then don't have to wait 2 or 3 days before you make an offer. While you're standing there on the site, you can actually do all your calculations, go to our support platform, do the deal analytics, and then be able to make an offer immediately. Now, there are 2 things that I have to emphasize here. So, doubling on the one side, you will have all the tools available. In fact, you already have all the tools available because you've got one of our tablets. And you can then calculate everything you need to calculate to make sure that the deal is good. If you believe the deal is good, you can make that offer. The second part is that you then don't have to wait. So often we have had students and people come to me and say, how do I secure a deal before somebody else grabs the deal? Often what happens is people go, they view the property, and they'll say, okay, give me a couple of days to think about it, because they need to then analyze the deal. They then go away, they do the calculations, they talk to some people, and then 2, 3 days later, sometimes a week later, they phone the broker or the real estate agent, and they say, I'm ready to make an offer. And then the agent says, sorry, the deal's gone. Why? Because they took too long. Now, a lot of people say to me, but if I make an offer immediately, then I'm stuck. No, you're not. If you are wise and you follow our principles, when you make the offer to purchase, and this is part of the how, when you make that offer to purchase, you have 2 things that will help you if the deal is not actually viable, if you make a mistake after or before you make the offer to purchase. Once you've put in that offer to purchase, you must, as a very important caveat, make sure that the offer includes 2 clauses. Number 1, part of the offer must be a due diligence. Number 2, must be subject to you being able to raise the capital. Now, normally I say ask for 30 to 60, even 90 days. to do the feasibility and due diligence, as well as raising the capital. Why do we say that? Because that then gives you enough time to analyze the deal financially, legally, and technically, as well as structurally. And those are all the things that you need to study and analyze with your team of professionals before you make the final decision. So you've made the offer to purchase. It's subject to due diligence. If the due diligence fails, what do you then do? You then write to the seller and say, the due diligence has failed. I either want to cancel the deal, which you then have the right to do because you have the clause, or I want to make a better offer so that I can accomplish the yield or the return on investment that I require. On top of that, you also have the financing clause that if the bank looks at it or the investors look at it and they say, hold on a minute, this thing doesn't make sense financially, you can then go back to the seller and say, sorry guys, this deal isn't good for me. I either want to pull out or I want to make a better offer. And there is no legal recourse. So you then don't have to worry that if you make an offer today, that in 30 days' time, you're forced to then do the deal. You are not. So those are very important things that you need to understand, and we'll talk more in depth about those things. Okay, so at this point again, in doubling, I'm going to ask you, do you have any questions at this point in time?
No, Nigel, I don't have any questions, but I'm really happy that you did touch on the fact that sometimes if you don't make a deal or an offer to purchase fast enough, then you can be intercepted by other buyers. I think that was one of my key learnings in my first property. I think it was only after viewing 12 properties because 7 of them I lost them to other people because I didn't know how to make those calculations fast enough. So by the time I was returning to the agent, they were gone.
Yeah. And I can tell you, I mean, I've seen hundreds, if not thousands of deals slip through the cracks with some of our students, as well as just people that I've advised and even deals that I've tried to do. I mean, if I look over the 20 years that I've been in the sector, I can easily tell you that of the thousands of deals that we've looked at over 20 years, we've only done less than 5% of those deals. So don't be discouraged if you do 10 deals or 20 deals and nothing has come yet, because over 20 years, I can tell you categorically that you'll probably only do 5 to 10% of those deals that come across your desk. So be encouraged, even if you haven't been able to secure a deal yet. Okay. So the next thing we need to talk about is protecting your wealth. Yeah, I just want to say, one of the things that I believe and I've experienced, it is so easy to make money, but it is so difficult to protect your wealth and to hold on to that money. I have countless examples of people, including myself, including my previous bosses even, including the businesses that I've worked for, and very many wealthy people, that we make money, millions and millions and millions of rands, and then we lose it just as easily. The important thing is to learn how to make the money in order to build the legacy. So just last night, I was laying in bed and I thought how easy it is to make money. Do you know, doubling, that to grow mushrooms, it takes 7 days to grow a crop of mushrooms? All you need is a dark room, some manure, and the seeds for the mushroom, obviously. And within 7 days, you've got a crop of mushrooms that you can sell to either the public at events, or you can try and package it nicely and sell it to big corporates like Spa and Pick and Pay and whatever. 7 days, that's all it takes to grow a crop of mushrooms. So you can then make money every 7 days by growing mushrooms, just by having a dark room and some manure. Can you believe that? So that the other thing is you could possibly go and buy some eggs and sell it at the market. You can buy some water and bottle it differently and sell it on the market. There are so many, there are literally hundreds of thousands of ways to make money. You just have to find your niche. Holding onto that money is really what we're talking about here. So very often people will say to me, Nigel, what are you talking about buying property? There's no way I don't have money to buy a property. And I will say, you mentioned it earlier on. There's a thing called other people's money. It is so important to remember that using other people's money in order to then invest into a property opportunity or save over a couple of years. So let me tell you a little story. Take a sip of water and tell you a little of my own story. 16 years ago, I had been working for this company and then I resigned and went to work for another company. At the time, I was in an investment opportunity. I had an investment through a retirement annuity at 114,000 Rand in the retirement annuity at the time. And in fact, I couldn't take it out because you can only take it out at the age of 55. Because I'm 52, I still can't take that money out. But let's just go into the scenario. Right now, that investment is worth 150,000 Rand. I just got a statement a month ago from that company. If I had taken that money and I've used, say, 14,000 Rand of it, and 100,000 Rand I used to then use as a deposit, get the bank then to lend me 900,000 Rand, I probably would have had an income of about 7,000 or 8,000 Rand from rent. I would have had to put in, say, about 2,000 or 3,000 Rand from my salary in order to cover the bond. Probably less, but let's say 2,000 or 3,000 Rand. Over about 3 or 4 years, I would have been able to cover that, or 1 or 2 years even, be able to cover that, the bond from the rental income, because the rental income would have grown and I would not have had to put in any more money. So after a year or two, that would not be a problem anymore. Then I would be cash flow positive. Over this period of 16 years, instead of now having an asset of 150,000, which I currently do, I would have had an asset of more than 2 million Rand, because number one, my bond would have been paid up. But number two, the growth on the asset every year would have been such that the value of the property would have been much more than 2 million Rand, especially here where I live in Cape Town. So not only would I have a debt-free 2 million Rand investment, more than that, I would have a rental income of anywhere between 15 and 20,000 Rand per month. Whereas at the moment, all I have had is, over a period of 16 years, I've received 36,000 Rand in growth in my investment. That's it, with no monthly income that goes to my pocket. So imagine if I had that property, I would have obviously bought more property during this time. And I think just like you and doubling, I would have then had enough money over this COVID period. If I had lost my job, I don't have a job because I work for myself, but let's say I had lost my job, I would have had enough money from that rental income to cover at least about 30 or 40,000 rands worth of household expenses. Now that is more than enough for most households to survive. And I think, Doubling, you have a similar story where your rental income actually helped you out a little bit. Am I right?
Yes, especially because with the lockdowns, the multiple lockdowns that kept happening, a lot of events that had been planned and invoices that one was expecting never happened.
Yeah.
So I found myself in a position where I was grateful that I had rental income to actually be able to sustain me in that time, which I think also
100%.
extends my passion for this and wanting other people to also gain the same knowledge to be able to, empower themselves as well in moments of dry spells.
Yeah, no, for sure. So, okay, let's wrap this up. The last two things that I want to talk about is property as a business. Be sure that if you want to build a legacy for yourself, that you protect yourself through all of the different legal protections, the tax protections. Yes, even SARS can help you to build a property portfolio, because there are certain tax incentives that are available to you that can help you build a property portfolio. And we'll talk a bit more about that during this 50-day challenge. And then the last thing, take action now. If you don't take action, nothing's going to happen and you'll never be able to build a property portfolio. We in the property industry always say the best time to invest in property was 10 years ago. The second best time is right now. And on that note, I'd like to end the session. And Tabeleng, thank you for joining us on this 50-day challenge. To you, the public, thank you for joining us. And we hope to have another session when we talk about financial freedom. So thank you for today. Enjoy the rest of your day. We'll see you again tomorrow. Cheers, everybody.
Bye.